Risk, reward, and the bottom of bear markets. How do you manage it all? How do we manage it all? I want to talk about that in this video, especially as it applies to this bear market bottom, this bottom range that I very much think we are. I think we're within 30 to 60 days potentially of the bottom being in. And I want to actually explain why I think that is. I want to show you real data. I want to show you real charts, why I think it is, and kind of explain my mindset here. But to start, it really is risk reward, and that risk tolerance is different for everybody. You and I, we're just all so different. We have different situations. We have different views of the markets, and we have to sit back and really start thinking about these things. And right now, I have to admit that being now in what I think is the bottom range of this bear market, it's getting kind of dicey for me. It's getting kind of difficult to make some big decisions. And these are decisions that we always talk about, opportunity and the fear, and making the true decision to take advantage of that opportunity is one thing, and saying we're going to do it is a different thing, right? And that's kind of where I find myself, and I want to talk about how I'm working through that. But let's start here, and I want to start before we look at why I think 30 to 60 days we're going to see the bottom. I want to talk about one thing, and that is social sentiment. Check this out. Seems like it's all over, Dan. Everything related to crypto and Bitcoin is going under, collapsing and shutting down. It's done, man. The ship is about to be laying on the bottom of the ocean floor. Talk about bearish. And I realize that this is one comment, but I just want to note something. I've been doing YouTube videos 4 or 5 years now. That means that I was doing videos throughout the last Bitcoin bear market, crypto bear market. And this is exactly the type of comments I was receiving. And it's not just this one. I'm receiving this sentiment consistently, and it's growing. And I think it's very indicative of the fact that we are very much in between anger and depression phase. And that phase, I want to just point this out, is volatile, it is unknown, it's choppy waters for sure. And I want to discuss my own approach to risk management and risk reward in these choppy waters. So let's really start with a roadmap, and it's not Bitcoin this time. Bitcoin kind of acting as a cycle roadmap, and it really does apply to everything we've been talking about. But in this video, I want to show you the S&P 500 chart. This chart heavily dictates and reflects what we are going to experience in the crypto world. If you're not watching this chart, you should be. And if you want to see the best possible chart in terms of what might happen next for markets, this is the chart. So far, we've been in this lower high environment, meaning we've been in this bear market. And you can see on the S&P 500 chart, it's just lower highs. At these rectangular boxes, these are lower high Fibonacci retracement resistance areas, and they play out and they work so consistently on the zoomed in and the zoomed out charts. This is just yet another example of Fibonacci retracements playing out so nicely. And you can see even the most recent Fibonacci retracement on this chart that we've been tracking, the S&P 500 hit it, saw resistance, and bounced to the downside off of that resistance. What I more specifically want to do is dig into how this plays into the next 30 to 60 days. Now notice that first lower high resistance, that rectangle area where S&P is falling, we're hitting that lower high Fibonacci. From March to May, it took 57 days from the 20-day moving average resistance that it saw in that area to put in a new lower low. And then if we look at the next lower high, from August to October, it took 48 days from the 20-day moving average, the green line resistance, to put in a lower low. If this plays out yet again and that 20-day moving average acts once again as resistance, if it's tested here in the short term, and let's just assume it took maybe 50 days to put in the next lower low, this would very much fall in line with the timetable that we have on Bitcoin charts for Bitcoin to also kind of put in its final low in its cycles. Now, ultimately, this would bring S&P 500 to put in the lower low sometime in the beginning of February. This would be an additional 20% to the downside for the S&P 500. If equity markets are kind of operating in an environment of downfall like that, it's true that crypto probably acting even more volatile. And for Bitcoin, we already know we have a cushion of 30% plus to the downside in play, to the $11,000 to $12,000 range. And if that were to take place, at the same time, the S&P 500 finds a new lower low by the beginning of February, then this really could be signifying the bottom of the bear market. I know many of you out there might be like, 2023, Dan, it hasn't even started. 2023 is going to be the year of the recession. It is going to be terrible. And this is something that I've heard. And I just want to say what I'm focused on is what I've been researching. What I'm focusing on is the data that I've seen. And if we look at previous recessions, it really has been documented that the year before the actual recession was the worst of it for markets. So the markets could very well start bottoming out and turning around before the economy starts looking bullish again, before the economy really starts exiting all of this bearishness that it's in. The markets could turn around first. And even if you look at 2018, you can actually see Bitcoin in terms of its comparison to equity markets. Bitcoin, I believe, started kind of exiting the bottom of the bear market days before S&P 500. That could be something that we might look at as well. But ultimately, this would look like a 20% dip for S&P 500 markets to around 3,000, a total dip of around 37% in this bear market. For context, the COVID dip was around 37%. The 2018 bear market, S&P was down 20%. And in 2008 to 2009, S&P 500 was down 57%. So it seems reasonable that a 37% total dip for S&P 500 charts in this market that we've been in is realistic. And if that's the case, based on the trend that we're in, it could happen in the next 30 to 60 days in a lower low for S&P 500. So it stands to reason that we might only have maybe 30 to 60 days. Now, there is no guarantee to what I'm talking about here. It's speculative. This is one scenario that I'm exploring myself as an investor. But if it's true that 30 to 60 days, the bottom might be in, I really question myself, am I prepared? Am I making the right decisions in terms of accumulation? And so for me, as I look at the Bitcoin charts and I realize it could have bottomed, or there could still be 30% to the downside, it becomes a very tricky and dicey situation to really figure out how I want to accumulate over the course of the next couple of months as markets maybe do turn around. And at the end of the day, for me, it's really not rocket science. When I make these decisions, there's two things that I'm just trying to realize. Number one, make sure I'm not spending more than I can afford to lose. Meaning, and this is the extreme of it all, when I'm investing any amount of money in crypto, I question if it all fails, if it all goes to zero, if I lose it all, and I apply this to even the current state of my portfolio, if I lose it all and the worst possible thing happens, am I okay? I better always answer yes to that question. That's number one for me. Number two is, am I comfortable? Am I comfortable when I'm making this buy? Or is it making me uncomfortable? If it's making me uncomfortable, I really need to dive into the data. Because for me, it's not so much an emotional decision. It's more of, if something is making me uncomfortable, there's probably something on the charts or something going on that is saying, hey, wait a little bit longer. And this is something that I kind of wrestle with on a day-to-day basis right now, as we really are, in my opinion, this is just my opinion, how I see things, as we really are kind of approaching this bottom range. And we're in, I think, this bottom range. Now, mind you, once again, I can't say this enough, the anger to depression stage, it looks nice because it's potentially the end of the bear cycle, but it could be long, brutal, cold, unknown, and volatile. So from a mental perspective for me, I am very much trying to prepare for that, because even if the bottom is in the next 30 to 60 days, it doesn't mean 3, 4, 5 months down the road, that bottom could not be tested once again. It very well could be tested. So that's the volatility that might be in store for the bottom of this bear market before we actually exit the bear market and start entering a more bullish environment. That could take a while. And that's probably the biggest thing that I'm trying to prepare myself for as I manage my own risk analysis. So let me know what you think, everybody. What do you think is going to happen? Do you think 30 to 60 days is realistic based off of at least the data that I've presented to you in this video? Let me know. Hit that subscribe, hit that like. I'll see you in the next video. God bless.